Time to talk about the different trading style, the different kind of traders that we have in the market. So this is something that is quite very important. You want to know what kind of trader you are. Would you like to be a scalper, day, position, or swing trader? It's very important that you understand what you want to choose, what kind of trader you want to be, because this will guide you in trading professionally and, more um how do I put it, organized kind of trading. You're not just jumping into the market and today it's scalping, tomorrow you are looking at taking a swing trade, next tomorrow position trading. Yes, when you get experience to some extent, you can combine like the scalping style and the day trade, or the day trade and the swing trade and all of that, but it's quite important for you to have a good understanding. So what do they all involve? So that you may choose what kind of trader you are. I've asked plenty of people who are traders, and this is a question many of them find difficult to ask because they don't even know what kind of trader or the trading style they've adopted. So let's go. Who is a scalper? Who is a day trader, swing trader, and position trader? Okay, so we're going to start from the smallest to the biggest. Okay, so the scalper. What kind of trader are scalpers? What does it even mean to be a scalper? Well, scalpers hold on to trade for a few seconds to a few minutes at the most. So they are short-term, very short-term traders. They just want to get into the market, snap it, and out of the market. Want to take the trade quickly, few pips, they're out of the market, okay? Scalpers hold trade for a small duration of time. They enter on lower time frames such as 1 minute, 5 minutes, or sometimes for some of them, they can do 15 minutes, okay? Multiple trades per one single trading session. What else? The main objective of scalper is that they are looking to grab small, very small amounts of pips. So they are not there like a swing trader who would sit in the market for a couple of weeks and just want the market to run. Whatever, if it is going up or coming down, they just want to quickly take the move to the up or to the down. They grab the small profits here and there. That's what they want to do as they trade throughout the busiest time of the day. So scalpers will look at what part time during the day is the busy time, when the larger markets in the world are open. The Eurozone, for instance, the London market is open in the morning, the US market that would open later. And so there is sometimes also what we call, a period where two markets are open at the same time. Okay, they like to trade around that period too because there is a lot of activity. When the larger financial market are opened and two of them, the London market is open, the US market is open together, that period there's so much activity ongoing in the market, and this is usually when a scalper want to fight trade because the market is volatile, it's moving up or down. They want to quickly grab 2 pips off, 5 pips, 10 pips or whatever, and they're out of the market. So that's how they do their own trading. They make their decision rapidly and trade execution. So they don't wait and think over it. Within a very short period of time, they've made their decision. They are in the trade, they go out again. The trading cost is higher compared to those who trade small time because it also depends on the broker you're trading with. If a broker charges commission, for instance, and you have entered like 20 trade that day, you know how much commission you've taken. The spread is there as well. Okay, so it's very important to understand these things in order for you to determine your kind of trader. Now, sometimes you also have to determine your kind of trader based on your personality. So if you are someone who just want it now, you don't have patience, you like to do something, go in fast and come out fast, then maybe that scalper will fit in with your personality more than a long-term trader who just take a trade and hold it. So if you cannot stand having your trade running for a couple of days and you're not sure what direction they're going to close at the end of it all, then it may be better off with this short-term trader. Okay, another kind of short-term trading is the day trading style. And what does this involve? Day traders usually pick a side at the beginning of the day, they act on the bias and then finish the day with either profit or loss. So usually they trade within 24 hours. They close their trade within that day. Some day trader could want to hold their trade to the next working day if maybe the trade is being in profit and it's still looking like it's continuing their way, or it's not yet even in their way, but it looks like this thing is continuing. If I close it now, it will be a loss against me, or I want to be able to make my full profit. And this is likely going to go my way in the next few hours. Now it is the end of day. Would you close it then? So sometimes day traders allow their trade to move into the next day. That's why I say hold trade for 1 to 2 days. All right. So within 24 hours usually. So let's say you open your trade this today by 12 noon and you close it the next day by 11 a.m. What happens? You've closed that trade within 24 hours still. Okay. So day traders are also short-term traders, but they do not hold their trade overnight most of the time. They only want to take a trade in the morning and close it in the night. Or if for any reason they enter the next day, if they don't want it to linger for too long. Okay. They hold their trade for 1 to 2 days at most, and most of the time 1 day. They enter on 1 hour to 4 hour time frame. Some day traders also go to take their entry from like a bit lower time frame, 30 to 15-minute time frame. They may sometimes get 1 to 2 trades per one trading session, or they may do a little bit more depending on what they are looking for. If they want to trade much more pairs or much instrument at the same time, they're not looking at just very little instruments to trade. They make decisions smart too, fast too. They don't waste too much time the whole day thinking whether to do a buy or sell. They made their decision fast. Within 10, 15 minutes, they've made decision. Medium cost of trading, medium risk reward ratio. Trading style, again, another one, swing trading. Swing trading style is such that the traders are the kind of people who would like to hold on to their trade for several days to several weeks at a time. Okay, so that's where I identify. I do more swing trading. I want to jump into the market, take my trade and hold it and let it run. Okay, and I also do day trade sometimes. So if I find nice trade from the 1 hour time frame, I jump in, I take it, I close the trade at the end of the day or the next day. And if I see trade that are swings, they look good for long-term trading, I can also take those ones. Okay, but I identify more as a swing trader. This type of trader can't monitor their chart throughout the day, so they dedicate a couple of hours analyzing the market in the night or morning or very early in the morning. So this one is the one I usually recommend for people who have day job, they have day business that they do, and it takes all their time. They do not have the time to sit in front of their computer the whole day watching how the market is moving tick by tick. Then what do you want to do? Take this kind of trade, swing trade that you take, and it could run for weeks, all right? They hold their trade for a few days to few weeks. They enter on daily time frame and 4 hour time frame. Because for me, sometimes I find trade from 4 hour time frame and I jump in, they do their analysis. So I think it's best to say doing analysis on daily time frame. 1 to 2 trades per week, all right? It could be a bit more if you trade much more instruments. Couple of hours to make a decision, low cost of trading, higher risk reward ratio compared to the day trading and swing trading style. All right, because they want to hold the trade, they want to be in the trend. Usually swing traders are trend followers, so maybe they are able to jump into the trend at the beginning of the trend. They want to hold it and let it run. Okay, now the last one we're going to talk about are the position traders. This ones, they capture profits from longer term trading moves. They want to hold the trade for several weeks to months or even years. So these ones are more like investors who want to go into the market because they've seen potential that this particular instrument is going to go up for an extended period of time. The next 1 year, it's still moving up, or it's going to fall for an extended period of time. So this is how they invest. They do position trading. These traders know that fundamental themes will be the predominant factor when analyzing the market, and therefore make their trading decision based on them. So these are not traders who only depend on chart analysis. They just go into the market, oh, it's trending up, oh, it has broken the support or resistance, and that's the only reason they are making the entry. No, they may go into the market to analyze the chart as well in order for them to find entry and exit and all that. But the predominant reason or factors helping them to make a decision to do this buy or sell is what? Fundamentals. Okay, so these are the kind of traders we have. So it's very important that you sit back and decide what kind of trader do I want to be, because your personality also has to come in. So your personality, how much risk appetite you're able to afford, and how much capital you have to trade with, because you can't be a position trader and be trading with something very small. All right. So you have to have sizable account in order for you to do position trading. To do swing trading, you also have to have a fairly sizable account to do swing trading. You can't bring $100, $200 into the market and expect to be able to do swing trading properly. So I advise that if you want to do choose your trading style, what you have to trade with, the amount you're willing to trade with would also matter in the style kind of trader you would have to choose to be. The amount you're able to trade with, how much you're able to risk in the market, and how long you want to hold your trade. Your personality, are you someone that can maintain patience under pressure? The market is moving and swinging up and down against you, and it's running for days and weeks. Are you able to cope with that and let it just run, whether it hits your take profit or it hits your stop loss? Then if you're that kind of person, you can be a swing trader or even a position trader. But if you are someone who doesn't have all the patience, then of course, the one that is best fit for you is day trading or scalping. All right. So this is how we come to the end of this. Thank you for tuning in, and see you in the next class.